stock market today, October 3rd, 2022. What a day in the markets. Over the weekend, myself, some other people, we were wondering, is there going to be a big drop in the market come this Monday? No, there wasn't. There was a bit of a rally, wasn't there? We see the Nasdaq was up by 2.27%. S&P 500 up by 2.59%. Interesting. 10-year treasury down 17.1 basis points. Gold up 2.18%. Bitcoin up 1.38%. Oil up a whopping 4.69%. The risk indicator down. How much? Down by about a little bit over 10 points. So Friday closing at 265, today at 253.20. Even though it's down a little bit from 200 to 300, it is high risk. So we're still in the high risk, and look at going back to the end of August, we're still up significantly. Where it was in the low 200s, now we're definitely in the mid 200s. Remember that U.S. Treasury being down? Here it is, looking at the line chart. So today closed down here, and the what tends to happen, right, is that when the yields on treasuries are going down, certain people with or institutions with money will move money into stocks because they feel like they can get a better return, so it can be potentially orchestrated by something like this. President's Working Group on Financial Markets, aka the Plunge Protection Team. So back in look at all these eights, 8, 8, 8. Back in March 18th of 1988, big Ronald Reagan, who was an actor and happened to be a president, signed in with executive order the President's Working Group on Financial Markets, aka the Plunge Protection Team, to help stabilize things. So one way potentially that they could be stabilizing is by having some groups go into a market and maybe purchasing high amounts of treasuries to drive the yield down. I don't know exactly how they do it. You'd have to call up some, either the, I don't know, you got to call up somebody and find out exactly how does this working group on the financial markets, what are they doing? How do they do it? I don't know, but they're probably doing something. And maybe that has something to do with driving this down. And so then we see things like this going up, right? Wow, look at that day today. Got a nice bullish candle here with not so much volume though. And overall, look at that big trend, still down. And as we look through these charts and we see these up candles, what you're going to notice is even though there's up candle, look at this, hasn't even passed this yet. Now it could, but here's a 200-day moving average, and it's got a long ways to go to get above that 200-day moving average. XLK, technology, same thing on our big trend chart here. It's still going down. We see that downward trend. Even though we had this update, we really want to see, just like on the S&P 500, see if it's going to get over that. Healthcare started moving down in this, definitely in this range. Had a strong move, still below all these moving averages, and seem to be getting caught here in this support resistance area. So for healthcare, the next layer of of resistance is going to be right in this area. Consumer discretionary, yep, still got this big downtrend. Even with all this buying volume coming in, what a weak looking doji candle there. And it's still stuck here in this range. Wasn't even able to get up over there. Real estate in this downward trend still. Another week, got a high amount of volume, more volume than we normally get on average, and it just does this lackadaisical little candle with the body being a little bit closer to the top, but still stuck in that range. Financial sector, we got our downward trend, and volume pushing up a little bit, and kind of a okay looking candle, but still just kind of moving sideways here. IWM, same thing over here on the Pro 2. Decent amount of volume, a little bit lower than the average, but it's just been increasing on that selling volume. And look at all that selling volume for the last couple of weeks. And our candle, our bullish candle today, still not really breaking this resistance area. Qs still got looking a strong downward trend on the stochastic. Volume, even though it's updated volume, look at that, a little bit light on the volume. And if you look at this, we're in this lower where this, if the prices are on top of this R1, that resistance is acting as support if it's on top of it. When it's below it, it's resistance. And so it shows you there's kind of like these different layers. Like, let's say this is the 9th floor, this is the 8th floor. Now it's kind of stuck on the 8th floor. So for having this big update, it didn't even break that or close above it. The dollar going down, and maybe that is why we saw certain things going up. As far as oil had this update here. Now this is that's a strong candle here, but we're still sort of, here's this area. We've been watching it at 82, and we're a little bit over that 83. If it keeps closing above that, if it keeps closing above this 83, maybe it'll start building a base, but we got this price consolidation area in here, so we'll have to watch to see what happened. Gold, big day up today. So a lot of times when the dollar is dropping, you'll see metals move up or other things move up. We've talked about that a little bit before. Is it really the value of a particular asset going up or down, or is it the currency that the asset is priced in going up or down? I know that might be a little bit weird to wrap your head around, but if the value of the currency you're buying something in is going up, then you don't need as much of that currency to buy something, right? That would be indirectly correlated with the price of something going down. If it took $100 to buy something before, but now the value of that currency is so strong it only takes 50, the value of the asset you're buying might not have really changed, the actual value. The price denominated in this currency might have changed because of the strength of the currency. Thus, you got the same thing happening. When the value of the currency goes down, sometimes the amount, or often, the amount of units of currency that you would need to buy this particular asset might have increased, right? Maybe it only took 50, maybe the value of that currency goes down, now it takes 100 again. And then sometimes it seems as if the value of this asset has changed, but maybe the underlying value of that asset is really the same. It's just been this changing of the currency. Now, sometimes both of them can change at the same time. It gets kind of complicated, and to be honest with you, I don't really know if it makes much of a difference when you're just talking about making US dollars in your trading account, but it might make a difference when you're figuring out for long-term investment things like this one right here. Or this one, possibly. Now, this is the big unknown. Let's change this down to 3 months. Still going sideways, right? But at least we got above and closed above the 20-day moving average. At least if you're a bull. But we'll see what happens. It's looking pretty weak right now, right? That candle is not a candle, what we're seeing at the moment. This is not a candle of strength here. This is a candle of weakness. Now, it could change. It could change, but right now, that current candle is looking a little bit like these. And it's got to look a little better. It's got to be able to get above that. So we'll see what happens with Bitcoin. We will take a look. Speaking of taking a look, let's take a look at our line chart for the S&P 500, which, you know, if you don't have a brokerage account and you want to look at some charts, you can use Yahoo Finance. It works pretty well. Just type in whatever ticker symbol you want, whatever symbol. Go to charts. Over here, you could change to whatever type of chart you want to look at, but we're going to look at the line chart. We're going to go to max, and we'll hit full screen. Now, see this little guy over here? Click that. We see where that little ball is showing us where the market is currently at. So we definitely broke this, right? And so now let's see if it's going to rally up a little bit, which it is. It rallied up a little bit. Let's see how far it might rally up. In order to really break this downtrend, we would, at the minimum, we got to get past here. We got to get back up around this, like 420 or whatever that is, 427, something like that. So here's our high, and as we see, it was dropping here, but it rallied up a little bit here, dropped here, rallied up a little bit here, dropped here. Look at how far it rallied up here before it dropped, and then rallied again and dropped. So you need more. You want to see more than just like a one-day rally. You want to see some real change. And right now, it's too early to say that. Right now, it's still on this downward trajectory. So what's my prediction for the S&P 500 for this video? My prediction is that there's 3 outcomes that the S&P 500 could possibly do. And the first outcome that it could possibly do is it could keep going down. The second outcome that it could possibly do is it could go up. The third outcome that it could possibly do is it could kind of move sideways. Now, that is what I'm predicting. I'm predicting it's going to do one of those 3. It's kind of a weak prediction, huh? Yeah, overall, saying it's still probably in a downtrend for the moment, to the point that what I'm particularly doing is I am looking for something like this, not necessarily on this particular stock, but I'm looking to see if it's going to if overall the market is going to be rallying up. How far is it going to rally up? Let's look at the S&P 500. How far is it going to rally up? Can it rally up past this resistance here? Can it get up into this zone? If it is, it's close to the 25-day moving average. And then what's it going to do? But I'm looking for it to rally up and break down. Now, with that being said, all this stuff could go out the window if for some reason the Federal Reserve starts another program that is either quantitative easing or called some other name, but in essence mimics quantitative easing. If they start doing something like that, then we could see something go to the upside. The reason why some people are speculating and believing, if you hear them talking about the Powell pivot or the Fed's going to pivot, that's what they're talking about. Is instead of raising interest rates like they were doing, if they're going to keep lowering these interest rates, which would drive more money into the stock market. And sometimes what they're doing is literally printing up money and somehow finagling it around and giving it to certain people to put into equities and all these different things. Again, you know, they've got groups like this going on that can help out with that. But if they start doing that, then we'll definitely see a rise in equities. It will be back to this type of rise. Depending on how much money they print, right? It'll be something like that. And people are speculating that that might happen because Europe has already pivoted. So they're speculating it might happen here. And for me personally, I'm not trading in a way, I'm not holding my breath and hoping, waiting for something like that to happen. I'm still sticking with the tried and true things that work for yours truly. Selling cash secured put options on stocks that I wouldn't mind buying at a certain strike price. Now in this downtrend, I'm being a little more selective. Sometimes I'm closing those out early. Sometimes I'm letting them expire. It kind of depends on what the stock is and how it fits into my overall portfolio. So I'm still selling cash secured put options. I'm still selling covered call options. Last week I had a bunch of options expire worthless, so that was great. Other than stock that I already own right now and some few long-term option positions I haven't opened up any new positions because I'm waiting to see what's going to happen. I definitely wanted to wait to see what was going to happen for Monday, and we see that it was an up market. So I'm looking to see something go to the upside and then possibly crash, or not necessarily crash, but go to the downside. So I'm being a little bit, I'm waiting a little bit. I want to see things line up. I want to get a better idea of what's going on before I start committing some money to any particular positions. And ideally, I want to take a directional trade. I'm just waiting. Instead of the stars aligning, I'm waiting for the charts to align. What should you do? I'll tell you what. If you're relatively new to trading, the first thing you should do is start paper trading. Paper trading, do simulated trading. And what you should also do is you should go to iofsuccess.com. You should download all these different things. At least one of them, all of them. And I'm working on another free resource for you, which you're gonna love it. You're absolutely gonna love it if you enjoy owning stock or selling cash secured put options. It's taken me some time because I use this resource, but I didn't make it. So, and I'm not as in contact as much anymore with the person that made it. So it's taken a little more time for me to make, but you are absolutely gonna love it. So with that, you guys have a fantastic day. Let's see what's going on tomorrow. Send me a message, leave me a comment, do something, interact with me. Come on, I'm over here in the middle of the Pacific Ocean. I don't have anyone to talk to. Give me someone to talk to here. All right, you have a good day. Bye-bye.